Okay, so welcome again, guys, to another episode of Finance by Speng. Today we are looking at personal financial statement. So, what we're basically looking at is your net worth. What is your personal net worth? A lot of persons hear the term net worth but don't understand what it actually means. In this video, we're gonna do a breakdown, and then by the end of the video, you will understand what your net worth is and how to calculate your net worth. So, what is personal financial statement? A personal financial statement, it simply provides a summary of your assets and your liabilities. These are the basic purpose of a financial statement, a personal financial statement. So it helps you to determine your net worth. It helps you to organize information you can use when you are filing your taxes or when you're applying for a line of credit. It also helps to measure your progress towards your financial goals. So these are basic purpose of planning your personal financial statement. To evaluate your financial situation, you will need to create yourself a balance sheet, a personal balance sheet or a net worth statement. What is your net worth? Your net worth is a simple difference between your assets and your liabilities. So you're going to evaluate your assets and your liabilities. You're going to find out the difference. The difference that you receive is your net worth. Okay, so how do you calculate your net worth? First, you will determine your assets. Then you will determine your liabilities. Your assets are any item of value that you own. There are four basic type of assets. The first asset is liquid asset. Liquid assets is any cash that you might have in your savings account or a checking account, or any cash that you may have in your personal possession. That is liquid assets, or any item that you have that can be easily converted to raw cash. That is liquid assets. Then you have real estate. Real estate is any land that you own or any property on the land that you own. So for instance, you have a piece of land and it may have a commercial building or a residential building or anything like that. That is real estate, and that is the second type of asset. Third, we have personal assets. Personal assets are any items of value that you own, such as a car, or say a valuable watch, or things of that nature. Any personal assets that have real value behind it, those are personal assets. But when calculating your personal balance sheet, always remember this. If you purchased a car last year, the price that you will calculate on your personal balance sheet is the current value of the car. So after you've done a current appraisal, that is the value that you use, the current market value of the car or any item or anything that you own. So that covers personal asset. The last type of assets is investment assets. These include any form of investment, so any stock portfolio, any bond holdings, any mutual funds, any commodities like oil or gold that you've invested in. These are investment assets, and when you're creating your personal balance sheets, you're going to evaluate all of these investment assets. Then, after you've determined your assets, you're going to now determine your liabilities. What are liabilities? Liabilities are the debts that you owe. Okay, so we have two types of liabilities. We have current liabilities, also known as short-term liabilities, and these are any debts that you owe that are due within a year or less. So any car loans, any money loans, any taxes that you have to file, or any medical expenses that you owe. These are called current or short-term liabilities. Then you have long-term liabilities. So these are like student loans or mortgages, any um loans that you hold that will take probably 3 to 4 or beyond years to pay. These are called long-term liabilities. So after you've determined your assets and you've determined your liabilities, you're going to subtract your liabilities from your assets, and the balance that you receive, that is your net worth. So your net worth is basically your assets minus your liabilities. The difference you receive, that is what you are worth. That is your net worth. So if you have say 50,000 in assets and 10,000 in liabilities, that is 40,000. Your net worth is $40,000, and not because your net worth is $40,000 means that you have $40,000 to spend, because not all of your net worth is liquid cash. Okay, so I've given you a basic understanding of how to get your net worth and how you'd go about calculating it. So here we have your assets here, we have your liabilities here, and we're just gonna go through a basic balance sheet and what it should look like. So here we have your liquid assets where you have a savings account holding about $5,000 and you have $500 cash at home or in your purse or in your wallet. We have your investment account. You have a stock account holding 45,000 and you have 15,000 invested in bonds. You've done an appraisal on your home, and your land and your home together cost $150,000 roughly. Your personal assets now, your car, the value of your car, your current market value of your car is about 10,000, and you have 5,000 in collectibles like baseball cards or any collectibles that you have acquired over time. Here we now have your liabilities, your current liabilities that are due within less than a year or so, like your medical bills. You have 1,200 in medical bills. You have a next cash loan for $3,000, and your taxes are valued at about 2,500. Now you have your long-term liabilities, student loans. You have 25,000 left to pay on your student loan, and you have 80,000 in your mortgage. Okay, so now that you have your you have identified what your asset is and what your liabilities are, you're going to go ahead and subtract your liabilities from your assets. The sum of your assets is 230,500 and the sum of your liabilities are 111,700. So you're going to subtract your liabilities from your assets, and the balance is 118,800, and that is your net worth. You are worth that, and not because you worth this means you have that to spend. It is all tied up in all your assets, and not all assets are easy to be liquidated. All right, so a personal balance sheet, this is something that you would calculate every 6 months to a year. After calculating your balance sheet, if your assets column is growing, that means you're doing something right and you should continue on this track. If your liabilities are growing, then you can find a way to invest more in your assets or cut some expenses. And this is basically how you go about calculating your personal balance sheet and determine what your net worth is. And this is a step closer in maneuvering and being on top of your personal finances. Thank you again, and have yourself a wonderful day.